Yesterday, the market went quiet. Not calm, quiet. And if you've been in this space long enough, you know the difference. Calm is when buyers and sellers agree. Quiet is when nobody trusts the next move enough to act. That's where Ethereum is right now. Ethereum didn't recover in November. It broke. The sell-off wasn't just another pullback in an uptrend. It was a structural failure, a sharp rejection that pushed price below every meaningful moving average that mattered. And now, as December comes to an end and liquidity drains out of the market, ETH is hovering beneath $2,850, like a ship with its engines idling just outside a storm wall. The panic phase is over, yes, but confidence has not returned. And that distinction is everything. On the surface, it looks stable. Buyers are stepping in on dips. Every flush toward the low 2,900s finds bids. But here's the part most people miss. These are not aggressive buyers. These are defensive buyers, reactive buyers. They're not chasing upside. They're cushioning downside. And markets do not trend higher on defense. They trend higher on conviction. Conviction is nowhere to be found. Look at where Ethereum is trading relative to its structure. The 20-day EMA sits just above price, near 2,180. The 50-day is higher, around 3,120. The 100-day looms overhead near 3,330. And the 200-day, that's still up in the clouds, reminding you where ETH used to live before November ripped the floor out. These averages are stacked bearishly, compressed into a ceiling that price keeps bumping its head against. Every bounce dies there. Every attempt to reclaim momentum stalls. This is not accidental. This is supply asserting itself. In bull markets, moving averages act like trampolines. Price hits them and launches higher. In bear phases or corrective regimes, they act like concrete ceilings. Price rises into them and gets slammed back down. Ethereum is in the second regime right now. And until that changes, every rally is suspect. Every green candle is guilty until proven innocent. Momentum tells the same story. The daily RSI is hovering around 45. Not oversold, not washed out, just weak, drained. Momentum stopped deteriorating, but it hasn't flipped. In past Ethereum cycles, real recoveries didn't T-start until RSI reclaimed 50 and held it like a line in the sand. That hasn't happened. Instead, we're stuck in this gray zone where sellers aren't panicking and buyers aren't committing. That's the danger zone. That's where markets lull participants into thinking the worst is over, only to roll again. Drop down to the lower time frames and the picture becomes even more revealing. On the 30-minute chart, Ethereum is trapped in a narrow box. Roughly $2,120 on the downside. $2,180 on the upside. That's it? $60? That's the battlefield. Supertrend flips back and forth with no follow-through. Parabolic SAR can't pick a side. Volatility is compressing. And when volatility compresses after a breakdown, it doesn't resolve sideways forever. It resolves with expansion. The only question is direction. Support around $2,125 to $2,130 has been defended multiple times. Buyers show up there, but notice how fast they disappear on bounces. That tells you everything. Nobody's confident enough to hold for higher levels. They're scalping, flipping, and getting flat. That's not accumulation. That's survival trading. And survival trading does not build sustainable trends. Now let's talk about flows, because price without flows is a lie. Ethereum continues to see net spot outflows. The latest reading shows around $14 million leaving spot markets in a single day. That number isn't catastrophic. It's not capitulation, but it's also not bullish. It tells you capital is still exiting quietly. Not fleeing, dripping. And dripping outflows over time can do just as much damage as one big flush. Historically, Ethereum's strongest upside phases didn't begin with neutral flows. They began with aggressive inflows, or, at the very least, a decisive slowdown in outflows. We're not there. Derivatives tell a similar story. Futures volume is up, activity is high, people are trading, but open interest is falling, now drifting toward $38 billion. That's not leverage building, that's leverage being removed. Positions are getting closed, exposure is being reduced. Traders are active, but they're not committing size. That's a market waiting for confirmation or waiting for permission. Look at the long to short ratios among top accounts. They're still skewed long. On paper, that sounds bullish, but price isn't responding. And when longs persist without spot inflows to support them, the market often does one of two things. It either grinds sideways until those longs get bored and exit, or it pushes lower to force them out. Neither outcome is immediately bullish. This is the uncomfortable truth about Ethereum right now. It's not broken beyond repair, but it is not fixed. And pretending consolidation equals strength is how people get trapped. From a bullish perspective, the roadmap is clear, but it's demanding. Ethereum must hold $2,120 on a daily closing basis, not intraday, not on a wick. A close. Lose that, and the entire base narrative starts to unravel. Above that, ETH needs to reclaim $3,000 decisively. not a fake breakout, not a 1-hour spike, a sustained move. Then comes the real test, $3,050 to $3,120, where the 50-day EMA waits. That zone is where trends change or die. If Ethereum can reclaim that level and flip it to support, then momentum can start to rebuild. Now let's talk about the bearish path, because it's cleaner, less conditional. If Ethereum loses 2,920, the next stop is the November low zone around 2,950. That level matters. It's not just a number, it's a psychological anchor. Break that on a daily close, and you open the door to $2,700. That's where stronger historical demand sits. And if that fails, the conversation changes. Suddenly, $2,500 is on the table. Suddenly, people start asking whether this was just a correction or the start of something larger. The alignment of moving averages tells you who has control right now. Bears do, not aggressively, not with panic, but structurally. And structure always wins in the end. Zoom out to the 4-hour chart and the compression becomes obvious. Support at $2,190 has held. Buyers defended it. That's real. But resistance at $3,067 is equally real. That's where prior breakdown occurred. That's where sellers stepped in with force. And above that, $3,437 remains the macro ceiling. The level that rejected ETH hard and started this entire sequence. That level is the line between recovery and rejection, and it's far away. Here's the part that matters most as we head into year-end. Liquidity is thinning. Desks are closing. Risk managers are tightening limits. When liquidity disappears, price moves faster on less volume. That means false breaks become more common. Stop runs become easier, and emotional decisions get punished. This is not the environment for blind conviction. It's the environment for discipline. Ethereum is not in free fall, but it is not in control. It is stabilizing below resistance under bearish EMAs with neutral to negative flows and declining leverage. That combination rarely produces explosive upside without a catalyst. And right now, the market is waiting for confirmation, waiting for Bitcoin, waiting for January, waiting for someone else to move first. And that's the truth nobody wants to hear. This is not the moment of triumph. This is the moment of tension, the moment where positioning matters more than prediction, where patience outperforms bravado, where reacting beats guessing. If Ethereum holds $2,120 and starts reclaiming levels with volume, the narrative can shift. But until then, rallies are tactical, not transformational. They are trades, not trends. And confusing the two is how accounts get slowly drained. The market is balanced, but it is not comfortable. And comfort is the enemy of survival in this space. Watch the levels, watch the flows, ignore the noise. Ethereum will tell you when it's ready. Until then, stay sharp and don't forget to subscribe.